A very good morning from Khandwala Securities Limited and welcome to Thursday's trading action at Dalal Street, dated May 12th, 2022. Overnight, the Dow plunged to fresh lows for the year on Wednesday as an ugly reversal in tech fueled a broad sell-off after data showing inflation remains near 40-year highs, stoke fears of more aggressive Federal Reserve rate hikes. The Dow Jones Industrial Average slipped 1.1% or 342 points, the S&P 500 fell 1.7% and the Nasdaq fell 2.3%. The Labor Department said Wednesday its consumer price index slowed to 0.3% last month from 1.2% previously, exceeding forecasts for a slowdown to a 0.2% rise. Consumer prices in April year-on-year slowed to 8.3% from 8.5%. The street is now suspecting a more aggressive stance from the US Fed as it might look to increase interest rates by 75 basis points in its next two meetings. Also, crude oil prices have bounced back as WTI oil reclaimed $105.91 mark in overnight trade. Long story short, now bears don't just have the license to roam but also to kill. Honestly speaking, the fear of an economic slowdown is more profound than it appears. We say so because Nasdaq Composite has re-entered bear market territory, has fallen nearly 30% from its January highs. The S&P 500 is at its lowest close since March 31st, 2021 and now needs to lose another 4% or so before entering a bear market, while the Dow Jones Industrial Average needs to fall another 8% to enter bear market. And if you see Nifty slide, well, it has tanked over 10% from its recent high on 4th April 2022 at 18,115 mark. Another main reason for the fall can be attributed to relentless selling from the FIS camp. FIS continue to be net sellers for the 8th straight month since October 2021. Well, in order to gain traction on the buy side, the FIS camp need to participate on the buy side and that too with humongous numbers. But in Wednesday's trade, FIS sold shares worth Rs 3,609.35 crores, while DIS bought shares worth Rs 4,181.2 crores. All eyes on key economic numbers to trickle in today. CPI data year-on-year for the month of April, manufacturing output month-on-month for March, cumulative industrial production for the month of March, industrial production year-on-year for March. Now before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty current market price 16,167, sell at current market price, strict stop at 16,375, targets 15,901 and then at 15,657, aggressive targets at 14,901, Bank Nifty 34,693, sell at current market price, strict stop at 35,201, targets at 33,651 and then at 33,001, aggressive targets at 32,451. Outlook for Thursday, bloodbath likely. The Nifty options data for May series suggests Nifty is likely to be in a trading range of 15,900 to 16,700 zone. Maximum call open interest at 17,000 followed by 17,500 strike price. So the 17,000 mark would be Nifty's crucial resistance zone. Maximum put open interest stands at 16,000 levels followed by 15,500 levels. Call writing was seen at 16,500 and then at 16,400 strike price, while there was meaningful put writing at 15,900 and then at 15,700 strike price. That's all we have for now. For any queries, do contact us at 022-4076-7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.